Good morning and welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Here are the stories we're following today.
I'm Charlie Pelletin for Doug Krisner this week. Stateside, we got a number of big tech earnings from the likes of Apple, Amazon, and Intel. We'll hear from Intel CEO Pat Gelsinger later in the program. But first up, reaction from Elfreda Jonker, client portfolio manager at Alphinity Investment Management. She spoke with Bloomberg's Sherry An and Annabelle Drewlers.
At a time when we got those more disappointing outlooks when it came to Meta and Microsoft as well. Yet when it comes to your top picks, Apple is one of them for you.
Yes, if you look at the results from the start of the reporting season up to now, it has really been a bit of a mixed reporting season overall for all the tech stocks. If you think back at the start, we had a few misses, something like a Cadence came through with a good result. This morning, Microsoft as well as Apple probably a little bit below what the market was hoping for. You've discussed China, but also I think it's all about the outlook statements. I think the key point to make here is that these tech giants are still coming through with really, really strong earnings growth and strong revenue growth. The shock and awe of the AI trade is just probably over now. They are not surprising by 30-40% anymore as they did before. So yes, they've done a great job. And yes, some of the areas are still doing very well, particularly some of the businesses like Microsoft has got a range of different businesses that they can generate revenue from in AI. But we have started to see a little bit of capacity constraint and also impacting particularly on the cloud business side. But taking that all into account, majority of what the market is focused on is really the outlook statement. And that is where Amazon, as well as Alphabet, has come out with probably better than expected guidance for the next quarter. And then Apple, where they generally generate 35% of total financial year sales in the fourth quarter, that was a little bit softer. And if you take that into account with just releasing their Apple Intelligence, there are a number of questions that we need to work through and understand how long this sort of is it the shorter term problem, or is there a little bit more in this later on? So yes, we will be taking it into account. We have been taking profits in this area over the last sort of year to date. We've taken a lot of profit out of NVIDIA, Microsoft, Alphabet. So it's not the huge position that it used to be, but we still believe there is space for it in the portfolio.
So then how are you thinking about your framing around this? Are you still looking at sort of the picks and shovels? I noticed you said capacity constraint, and that makes me think of Microsoft, for instance, this week. Are you still in that part of it, or are you going more into the application side instead?
Yes, I think if you take a look back at what we saw during the internet phase, it was very much semiconductors first, then infrastructure, then you have the software and services at the top. So we definitely have been exposed to sort of all three of those different stages. But now we do believe that, it's probably worthwhile having a player in each of those games, but not have two or three players in each of those different stages. So where we at is probably more adding to the infrastructure side. So as I've mentioned, Apple sits right there in the middle with their devices, but also something like Microsoft can still play in the sort of software and services that sits on top, as well as Amazon and Alphabet. So that is what we are currently looking for. We're looking for companies that can generate revenues out of each of those different phases. And NVIDIA, the reason why we keep on holding it, and we have been cutting back quite a bit given the valuation expansion, but if you look at the capital that these big mega hyperscalers are spending, we've heard earlier that they will just continue to spend even more next year. That's very positive for NVIDIA. We just need to understand exactly what's going on with capacity. So far, all the news that we've heard from Jensen has been that there's a massive demand for the new Blackwell chips. We will be doing a lot of work. Our analysts have been on the ground doing trips, understanding that sort of back end to get a better sense of the capacity. For now, we don't think it is a huge problem, but we could potentially see not just for NVIDIA, but also for the likes of Microsoft, that some of those revenues could be postponed a little bit into next year rather than into the fourth quarter this year. So a bit of a delay potentially for some of these revenue generating companies.
I'm a little bit concerned about the savings rate because when we talked about the broader markets, we always thought there was a little bit of buffer despite the downside and the pressure that we could see from uncertainty in politics, geopolitics, and so forth. Is this going to be an issue going forward for the U.S. markets?
Yes, I think what you have seen currently, clearly the data points coming through, like the GDP growth rate, even just the consumer numbers out yesterday, consumer spending, even housing started to come through actually a little bit better than expected. So what we are seeing overall for the economy is probably an economy that's doing okay. And that's why we are not expecting that a hard landing or a recession, but a softer landing. I think the important thing to point out here is that the interest rate market is clearly not necessarily believing the interest rate cutting cycle that the market is sort of forecasting at the moment. And that could be a very important point to look out for. So on the consumer and the saving rate, yes, that is something that we do watch. I think the saving rate relative to where we've come from and relative to other countries in the US is actually still relatively okay. But from a consumer spending perspective, we have been pretty cautious on the consumer overall. And even the current reporting season, what you are seeing is quite a bifurcated market where the lower end is definitely still struggling. Dollar stores not necessarily doing well. You continue to see the down trading happening, eating at home, those sort of things. But then on the upper end, you have segments that is doing quite well. So that sort of higher end consumer. But on the other hand, you also have luxury really struggling on the back of a weaker China. So for the US economy itself, for us, the important thing really to understand here is what is happening to inflation and what's happening to the interest rate outlook statement and interest rate outlook in general. Because if we do get a Trump win, for example, huge tariffs necessarily doesn't mean a positive outlook for the economy or for that interest rate outlook. So there's a lot that you currently need to bear in mind when you think about the macro outlook.
And Elfreda, I mean, I think to your point around the luxury end and that China risk, I mean, Estee Lauder was a perfect example of that overnight, the biggest drop ever really for the company after they withdrew their China guidance. But you speak about sort of that rally perhaps broadening out. How are you thinking about positioning then, given we do have that risk of rates staying elevated going into 2025 if Trump does indeed return to the White House?
Yes, so what we have been seeing of late is definitely sort of a resurgence of some of the sectors that's actually been in a deep recession over the last 2 years. So if you think back, over the last 2 years, we've actually been in an earnings upgrade cycle for the overall market. We've had, consecutive months of the market running more so than what we've had for many, many years. But you have actually seen that sort of underlying earnings trajectory. It's been 18 months of positive earnings, but what we have seen of late is that sort of starting to falter. It's still positive, but not nearly as good as we want to see. And you have seen the broadening out from just tech stocks driving performance and earnings. And where we are focusing is on those sectors, for example, financials, it's starting to see earnings growth come through, particularly capital markets opening up.
Unfortunately, got to leave it there, but that was Elfreda Jonker, Client Portfolio Manager at Alphinity Investment Management.
Coming up, a conversation with Intel CEO Pat Gelsinger. I'm Charlie Pelletan. This is Bloomberg. I'm Charlie Pellet. Doug Krisner is off this week. We go next to Intel, which surged in late U.S. trading on optimism about a turnaround. And for more, we hear from CEO Pat Gelsinger. Here he is in conversation with Bloomberg's Ed Ludlow.
Pat, thank you for your time. In the quarter gone, we were just talking about how you made painful decisions, and those showed up as impairment charges and were reflected on the bottom line. To start, could I ask if that's it now, that those actions are taken and you now have line of sight on what you want to do, or if there will be more sort of restructure to come?
Yeah, we worked very hard this quarter to get this done. And the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way. But to also deliver better than expected results if we eliminate those one-time charges, and to take our guidance up for Q4. I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges, maybe in the history of Intel since our memory microprocessor decision almost 40 years ago. Getting that done and still beating results and taking the guide up. This was a very significant quarter for our team to execute. Very proud of their disciplined results.
Pat, the investor base are cheering you. I'm going on the reaction of your stock in after hours. But a lot of that does seem to be a focus on what you were guiding to in the final 3 months of this year. Away from sort of the financials and numbers, could you talk a little bit about the product business and the foundry business that gave you some confidence in that guide?
Yeah, and if we take it apart a little bit, the client business, we've launched our Lunar Lake product, the second generation of our AI PC. And the AI PC category, very solid. We'll be launching the commercial version of that into a good market, we believe, next year for a Windows refresh, a corporate refresh cycle, and we start to see more strength in the AI PC category overall with strong set of use cases and ISVs bringing new software into the marketplace. So we feel good about the client business. Data center, quarter on quarter, a little bit better than people forecast for that business, and a stronger product line with our Xeon 6 products now starting to ramp. And finally, on the Intel Foundry, quarter-on-quarter growth in that area, and a strong pipeline of external customers. We announced Amazon and 2 other 18A customers, some additional advanced packaging customers. So we're starting to see that business come to life. And that's a long-term business, because when people move designs, it takes several years for major designs to move into our foundry. So we've been at it now a couple of years, and we're starting to see the results of those hard work and getting back to competitive process technology with 18A. So a very good quarter of operational results.
Pat, we have a question from our audience, and that question comes from Clem DeLong, who's the CEO and founder of Hugging Face. And he makes the point that on his platform, there are many more smaller models now available. And it's leading him to have a question for you about Intel's place in the on-device trend we're seeing with AI and how you're going to enable more on-device AI use.
Well, thank you, Clem. A great question. And Hugging Face, a great company. And, as you think about these models, we do see it moving from the training phase of, trillions of parameters to the inferencing phase. And exactly like the questioner says, in that inferencing phase, more of that will happen on-prem for data center customers, and many of those smaller models will be retrained with enterprises' own data. A lot of those will just run on Xeon. We don't need a special accelerator, or it'll be Xeon plus an accelerator. But also then the edge use cases and AI PC use cases. And I call it the 3 laws of the edge, right? The laws of physics, right? Speed of light. If I have to go to the cloud, I add time. Second law is the law of economics, right? It's cheaper to run it on my device. And finally, the laws of the land. My data on my device in my data center. So we see it moving from a cloud training world to an edge and on-prem world for inferencing for the future.
Pat, I therefore have to ask you about Gaudi. Your AI accelerator did not get the traction that you'd hoped, and you won't be making the outline target of $500 million in sales for this fiscal year or calendar year. Why? Is it a use case issue that the data center operators aren't looking at it, or something else?
Yeah, 2 factors that we pointed out. One is that now we have Gaudi 3 coming out, so there's more enthusiasm for the next generation product that we're just starting to ramp now. The second one is the software. And the software use cases, the AI world has moved very rapidly and innovating very quickly. And the robustness and the completeness of the Gaudi software stack hasn't been as great. And it's an accelerator, not a full reprogrammable GPU. So that makes some of the software porting and optimizations a bit more difficult. Obviously, as we get more of that running on Gaudi, we solve the software problems. Okay. But secondly, then, it's also to move to a complete GPU capability, which we'll be doing out in time. And that development effort is also well underway. So we feel we have a solid position. The world is coming to more on-prem and enterprise use cases like the last question asked. And Gaudi 3, good early indications from the marketplace and its success as we ramp it in 25.
Pat, Bloomberg's reported that ARM and Qualcomm, 2 of your peers, are interested in buying some or part of Intel. Can you confirm whether or not you received a formal offer from them or anyone else, and what Intel's consideration of them would be?
Yeah, and obviously there's been rumors and churn in the industry, and I think all of that just indicates how important Intel is to the industry structure and semiconductors, and how important those supply chains are, for the world. We don't view any of these rumors as particularly meritorious. We, laid out a strategy. We reaffirmed that with our board of directors, and obviously as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey that we've laid out, to produce sustainable profitability and result in shareholder return. So with that, I'm committed, the team's committed, we have the board support for the strategy that we've laid out, and Q3 shows that's exactly what we're going to do.
Pat, I've been trying to help our audience understand Intel's historic and current business, right? The products, but also foundry. And what you said was that 2026 is when those third-party customers start to show up. But could you just outline the path to that, what you want to hold yourself to for next year in developing that business as a sort of standalone unit?
Yeah, and it's a great question, Ed. And clearly we started to see that already emerge. And even this quarter, we saw quarter-on-quarter growth of the external foundry business, largely driven by some of those early packaging design wins. So these advanced packages are sort of a faster on-ramp. But ultimately, it's becoming a wafer foundry for the industry. And as we said, 3 major design wins this quarter, one with Amazon and 2 other compute use cases. So we'll be updating, the market as we win more of those customers and describing the lifetime deal value of those to the marketplace as well. So we'll give some of those breadcrumbs along the way. But it takes a couple of years for people to move these designs, a year to design it, a year to bring it into production, until it starts to ramp in the marketplace. So key milestones for 18A, that customers are now beginning those design cycles. The design tools, the design libraries are being moved over to 18A. But it really isn't until 26 that those results start to really help Intel's products, and then 26, 27 until we start to see meaningful volumes externally.
Pat, we're just days away from an election in this country, and I'm particularly interested in your assessment and planning for what might happen to the CHIPS Act programs. Of course, I don't expect you to know what will happen in the election. You do not have a crystal ball. But former President Trump has kind of made disparaging remarks about President Biden's economic agenda. How are you planning for that, please?
Yeah, and I'd say maybe 3 different perspectives. Number one, the CHIPS Act was a bipartisan act. And with that, strong support from both sides of the aisle. And with that, we believe the importance of that in terms of industrial policy, the semiconductor industry is well supported by Congress and both parties. Second, we are disappointed by how long and how slow the dispensing of funds has been. And it's well over 2 years at this point. I've invested $30 billion in capital, and we've seen $0 of the CHIPS grants at this point. So we do believe that that has been too slow, and we're somewhat frustrated by that. And we've taken it out of our financials for this year. That said, there's also the investment tax credit that we are seeing, and it is much larger than the grant portion of the CHIPS Act. And that is now law, and that will be beneficial. But clearly, I think whoever wins the election, the importance of this industry, the importance of rebuilding this supply chain and manufacturing is well supported. And Intel, as a designer, R&D, and manufacturer, is unique in the United States and in the overall structure of the industry. And we expect the broad support, of the administration, regardless which party wins, as a result.
Pat, 2 quarters ago, your CFO told me you were too over-indexed to CPU. And we know what happened with Gaudi. You made painful decisions in the quarter gone, reduced headcount by 16,500. Do you now have the plan in place? And are you confident from here?
We laid out a clean sheet program that we went through to really benchmark the business. We took a conservative view of the funding plan, as we call it internally, saying, we're taking a modest growth outlook and we're building our cost structure to that very modest outlook. But we've also built now a lot of optionality to scale up into the business. We have a shell ahead, right? We have capacity that we can scale into if necessary. And we've made a smaller, more efficient, nimbler company that is able to execute with more agility and speed as well. So we feel like we're now well set up for the future. This was a challenging quarter, for me, for the company, but we feel like we're well set up for the future, and the good operational results that exceeded the market's expectations and the increased guidance for Q4, we feel like we're now in a very solid position.
Intel CEO Pat Gelsinger, thank you for joining us here.
For more on the Intel story, we turn to Maribel Lopez, founder and principal analyst at Lopez Research. She spoke with Bloomberg's Sherry An and Annabelle Drewlers.
I'm curious for your reaction on the share price today, because is it telling you that investors are really believing that turnaround plan is taking shape, or is it more just relief and a relief rally that's coming through that the numbers weren't as bad as what we'd seen in last quarters?
I think the turnaround plan was quite clear from the start. There was obviously a significant issue with the turnaround plan last quarter that really put into question the ability for them to execute this quarter. We actually saw some really strong guidance around what's going to happen with the AI PC, which is really important to them in a very competitive market for Intel. We also saw wonderful news from AWS on the Foundry bid. And if you look at a company like AWS investing in Intel from the Foundry business, that actually says that they've done some testing and they have confidence that Foundry business could work for them. But I think if you put those two things together, you're starting to see a path where there could be a return of Intel into the market in a more meaningful way. So less distressing news, more optimism about the future opportunities Intel has over the coming 3 years.
And which part are you sort of more optimistic about? Because we just heard there about the outlook for Gaudi 3, for instance. Is it on that side, or is it more on the Foundry side, do you think?
So I think the Foundry side is actually incredibly important for Intel because it's really a new revenue stream. I think what we're seeing in the GPU market is that's a very difficult market to wrestle away from NVIDIA. The opportunity there, of course, is if we look at the longer game, which is in, say, at least a year or more, what we're seeing is that enterprise buyers don't necessarily need GPUs for everything. They need a mix of CPUs and GPUs. And this is where Intel has the opportunity to enter into the market strong when the buying actually starts to happen. We're all discussing the AI market as if it is here today, and we're really at the very beginning of it. We have product, we have use cases, but enterprise buyers have been slow to adopt. We've seen a lot of activity in the data center, but the data center is only part of the market. So what we're expecting, what we're optimistic about, is that Intel can come in on the back half and grab some of that enterprise buying that will be coming up in the next, say, year.
And Maribel, Apple, of course, also very much focused on Apple Intelligence, but we thought that perhaps a slow rollout of that feature would actually not lead to a lot of boost for the iPhone space. But were you surprised at what you saw in the September quarter?
I think in a lot of ways, Apple continually pulls a rabbit out of the hat. Just when you think iPhone sales are going to be fundamentally down and uninteresting, they come back and they show growth. We did see a bit more weakness in the Chinese market than we thought we would. I think there was an expectation that there would be a big pushback to growth. I actually think the Apple Intelligence side, people overplay that in terms of when the features come out. The things that people really care about with Apple are that they're going to have a better user experience, that they're going to have great cameras, great battery life, all the things that typically sell smartphones. And to continue to have, in the higher digit growth in the smartphone market is actually quite a feat to continue to maintain. So I think we're all very surprised and optimistic about where that was. And the services business is actually quite interesting for Apple as well. And that seems to be progressing at a good rate.
Maribel, what do you think about the China market in particular? Because it was really clear, as you said, that they're facing weaker demand there. Do you think that Apple needs to make a product that's specific for the mainland market? And if so, how would that look to you?
I think that's absolutely not in the cards for Apple. Apple tends to try to make a more ubiquitous, high-end, mid-range, potentially low-end. You could see that over time they've played those three tiers. But fundamentally different products aren't extremely scalable for Apple. If anything, I think they try to lean in and do more in India. It is going to be an extremely competitive market in China. We expect that to continue. But over the course of time, I think Apple will have a very solid showing in the Chinese market. I think everybody is very interested in seeing how well Huawei's high-end flagship products perform, but they're very expensive products. And if you look at a mass market appeal, we see the opportunity for Apple to actually go head-to-head and do fairly well in the space moving forward.
And Maribel, of course, we've been getting a lot of tech earnings, including Microsoft, Meta, also sort of disappointing when it comes to the outlook. What do you make of the broader trend right now when it comes to AI really impacting these tech companies' CapEx, future earnings, and just business performance going forward?
So there's a bit of a disconnect and disillusionment between what people expected to happen with the AI market and where we actually are in the AI market. So one of the things that we see happening is there has been strong revenue, but there continues to be heavy capital investment that has to happen in this market and will continue because we're not even at the point where we're seeing significant AI demand from enterprise customers. Once that happens and we see more workloads going to the cloud, that actually does continue to equal more expense. So I think what the cloud computing providers are trying to say is, hey, we continue to put out double digit in the 20s, in the 30% growth, which is phenomenal when you consider the run. All of that growth is being driven by AI right now, but there's a cost that's associated with that. And they want to try to temper expectations of what the earnings might look like or what the capital portfolio might look like moving forward, because that train is still continuing on, and the revenue is not going to pace equally with the expense, probably for several quarters.
Maribel Lopez, always good to have you with us, founder and principal analyst at Lopez Research.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, Sirius XM, the iHeartRadio app, and on Bloomberg.com. I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.